Hello, everyone. Welcome to the Ecom Power the Walmart Marketplace podcast. Today, we are discussing why bookkeeping is the key to surviving the recession. We're going to talk about why bookkeeping is crucial for online sellers, what mistakes sellers are making, and how you can protect your business during the recession. Today, as you can see, is just me. We got Norm in the Ecom World Summit in Istanbul. He's having fun, and I'm here with you guys. So let's have a word from our sponsors.
Are you struggling with your Walmart marketplace business? Do you need help from a skilled and reliable virtual assistant? Well, look no further than Virtual Assistant Academy or VAA Philippines. VAA specializes in locating, screening, training, and supporting high quality Walmart VAs in the Philippines. Their VAs receive extensive Walmart training and ongoing professional development and are committed to long term working relationships with you. Partner with VAA and experience the peace of mind knowing that you have a dedicated Walmart trained VA who's up to date with the latest tools and trends in the dynamic Walmart marketplace. Head over to VAAphilippines.com and let VAA match you with your ideal VA today.
All right, so today we are discussing why bookkeeping is the key to surviving the recession, and our guest is the CEO and founder of ConnectBook and Bottom Line Management with over 10 years of experience as an entrepreneur and financial analyst. He specializes in helping online sellers improving and be more portable. And his game-changing app, ConnectBook, partners with QuickBook and major online marketplaces like Amazon, Walmart, provide a shameless transaction a creation and real-time profit updates. So welcome, Nachman Laser.
All right. Hi. Thank you so much. Thanks for having me on the podcast.
Yes, thank you so much for coming. I told you before we started, we get all the time so many questions about bookkeeping. I think people get very overwhelmed when they're adding another marketplace like Walmart, and then they start having a lot of sales, and it's just so different, and people just trying to find a lot of solutions. So I'm so happy you're here because I personally have so many questions. Yeah, introduce yourself, and I would love to hear a little bit about your background.
Sure. Yeah. So I'm so excited to be here and excited to share. As the topic is why bookkeeping is the key to surviving a recession, and I'm actually seeing a whole different picture in the accounting and bookkeeping field. Last year versus this year. Meaning, last year it was more of, different. It was different type of businesses last year. Meaning, business was different last year than this year. Nobody can lie about it. Consumer spending is down, people are buying less, economy is changing, and I've seen huge shifts about it. So I'm excited to jump into this whole topic: how things are evolving, how things are changing, how things are coming. So just a bit of background on myself. Um, I am actually an accountant, and I graduated FDU with a master's degree in accounting. I used to work as a CFO of a large wholesale business. So our warehouse was around 200,000 square feet. It carried 25,000 different SKUs. So the hard challenge that I always faced, and that's where my experience comes from, and that's where I help sellers today a lot, is understanding your inventory value. So we'll jump into it, but if you don't know your proper inventory values, your books can be completely off. You can anticipate one thing, and meanwhile, the game is completely something else. So I worked there for like 4 years, and I was as a CFO, I was in charge of the full accounting department, and then from there on, at the same time, I was also going to school. So when my school was finished, I decided that I want to open up a bookkeeping company. So I opened a bookkeeping company because that's what I also had my experience in the last 5 years. And I started to work with a lot of small sellers, and started to work with the Amazon sellers. And I spent my first company that I actually worked with was a private label business, and they wanted to one partner wanted to buy out the second partner. So partner A was going to buy out partner B. Problem was that partner B was only a partner in like 3 out of their 10 items. So what they need to know is they needed to know how much money each product is making, because we needed profitability and a SKU level. But then it was more complicated. We had to figure out how to deal with the overhead and how to deal with everything to get to break everything down properly so they can do a proper buyout. I spent like 5 months, 6 months downloading all different type of reports from Amazon, spending a lot of time getting everything in the right place and doing the proper bookkeeping. And when I finished that, I kind of thought to myself, and these sellers also telling me, there's no good solutions out there for bookkeeping. And they kind of tell me, if you can, take this and make it better for the e-commerce world, you can do very well. So I was looking to grow my bookkeeping company. And what I want to do then is take all these reporting that I did and just build it into a platform. But I initially built it for myself. I didn't really build it to sell. And I started building it out. And then I was talking to sellers, and they were like, "Ooh, this is such a good idea, but we have our own bookkeeper, so we don't want to give you the bookkeeping." Or the other guy saying, "Look, I'm using this bookkeeping firm for 10 years. We're not going to switch." And so that's where we kind of like took a pivot, and we made the software as a standalone program that's today is a SaaS, and then we still run our bookkeeping company. And then what interesting happened afterwards is the bookkeeping company. When I started originally the bookkeeping, I didn't start like the e-commerce. I started originally for any type of business. I was doing doctor's offices, I was doing construction, I was doing plumbers, electricians, manufacturers. And then after ConnectBooks, started going out, and we started, bringing out the product, and we got a lot of, attraction to it. What ended up happening was we also started getting a lot of bookkeeping customers as well. People were like, "Oh, so you have the software, maybe you just do the full bookkeeping." So then we took our bookkeeping company, we kind of pivoted, and we focused just on e-commerce. So today, our bookkeeping company we would only do bookkeeping if you use our software, ConnectBooks, meaning that means say you're an e-commerce seller, and we have the software that automates 75% of the bookkeeping work. So number one, we give better pricing. We can turn around stuff way faster than we used to. It's literally a game changer. And then, we have the software as well, which we also work with a network of a lot of different bookkeeping companies. Like, for example, if you have a different bookkeeping company you want us to work with, we're more than happy to get on the phone with them. And then we have our own network. We can hook you up with different bookkeeping companies if you don't feel our company is the right fit. And, you can use this, and they would use the software to kind of automate the tasks and get everything into it. So what makes ConnectBooks very unique is kind of the background where it started from. I'm not a developer. I don't know how to code, but the benefit of that is that I'm an accountant. So a lot of times you see softwares that get built by programmers. They come up with this like mind-boggling idea, and it's fantastic. But the problem is they can't always relate to the business, and they kind of miss the boat on that end. In this case, I don't know if I can relate to Amazon businesses because I was never a seller, but I can relate to accounting, and that's what I'm good at. And the software is built from an accounting perspective. So if you want to have accurate books, have clear visibility, understand what's going on, that's where my expertise kicks in. And that's kind of what the whole software, everything was based around of. So we kind of like, it makes it very unique in that sense. And that's kind of what makes the software very special.
Yeah, that's a great story. Yeah, I think like you coming from the e-commerce side is probably making the software more related to the sellers, because if people just use QuickBook, it's not really going into like your transactions and sales and returns. It's really hard. So yeah, I like that. My first question to you is why bookkeeping is very crucial for online sellers in particular.
So bookkeeping is crucial for any business, not just online sellers. Any business needs to have a set of books. It was actually interesting. Someone called into my company the other day, and they wanted just like a little. We do two things. We have a lot of reporting tools, like we can do profitability, show you product, inventory stocks, replenishments, comparison reports, reporting. We have that available on the website. Then we also have the integration goes to QuickBooks. So they're very interested in the reporting tool, and we offer that as a standalone product. And then I was trying to, the guy was asking me like, why do I need QuickBooks? So I was like, well, you want to get an overall visibility, on your business. He's like, well, look, I have two products, so you only have two products, was a very small seller. He's like, well, I have these two products. I see how much money I'm making. I said, so first of all, every business has different expenses that come in and out. So I mean to say is that in QuickBooks, one of the main things is called a bank reconciliation. The bank reconciliation, what does that do? That means to say that every dollar that comes in the bank and every dollar that leaves the bank is recorded in QuickBooks. And the way you do that is you match the beginning balance of the bank statement, the ending balance of the bank statement, you match that to QuickBooks. Now, why is that important? Because imagine I give you a profit and loss, and it shows you that you made $10,000 profit. Well, meanwhile, there's a check that you wrote for $5,000 that I forgot to put in. So how do we make sure that everything that came in and went out is accounted for? That's when you do a bank reconciliation. So once your business, if you have two products and you have no like expenses, I can kind of see at some point, but the minute the business goes a little bit above that, and I would say our average customers, people doing like a million a year in sales plus, between all their platforms, at that point, what ends up happening is you're always going to have those one-time expenses that come in and come out. You just cut a check, like you want to make a new product, you're doing a mold fee, you got to pay a truck, you got to pay photography. There's so many little different expenses coming in and out, and if you don't have a proper accounting system, you won't know how to account for that in the right way. So what happens is with QuickBooks, that matches up with a bank account, and that goes through all the stuff. Now, why is if you don't have proper bookkeeping, what happens to say is you're missing out in the proper visibility of what's going on in your business. So I have a lot of like examples I can share, but like I'll give you a few small examples. So I have this customer who was doing around 20 million in sales on all platforms, and the end of the day, their profit margin was 1.4. So they did 20 million sales. Net profit after payroll, after overhead, after everything was 1.4 million. So first thing you say, wow, it's a beautiful business making so much money. Problem was there's no money in the bank. So here comes the question, where is the money? And this you can only do with the proper set of books. So what happened was when you run a balance sheet comparison, so what a balance sheet does is a balance sheet will show you the assets, the liability, and the equity of the business. It would also show you how the money moves throughout the business. So a profit and loss doesn't show you really cash. It shows you the income and minus the expenses. So what happens is we were able to show you, that the business's inventory value went from 3 million to 6 million. So what does that mean? That means the business really made 1.4 million of profit. However, the business didn't have the money in the bank. You know why the business didn't have the money in the bank? Because this year they have $3 million more in inventory than they had last year. So all the inventory they bought, they actually sold, but they stayed over $3 million in extra inventory. So what happens is that causes a big problem for cash flow, and they're not properly sure how to deal with it. So by having the proper set of books, we were able to show the client is like, look, you're not being on top of your inventory value. You're not being on top how much money you're flushing and how much money is getting buried in there. And that's where you kind of have more of a focus and more of a grip that goes onto the business. I had the same story with a different client. A different client they did like around 50 million online, and their cost of goods sold was, like I say, around 12. I don't know if it was 50. I'm not sure what the number was, but cost of goods sold was 12 million. So the cost of the products that were sold was $12 million. So my question was to them, on average, they were selling around $1 million worth of goods, meaning not their sales, but the cost of the products around $1 million. So my question was to them, how long does it take you to turn over your inventory? So that's a very important question, which I would ask anybody. Is how, and let's say a grocery, right? A grocery, by them, it's like key, because it's retail, you have a storefront, but you have the same thing with Amazon. The question is, if I put a bottle of milk in a grocery on the shelf, right? You're paying rent, you're paying all this overhead to keep the store open. Now, the question is, this amount of space, how much profit is it bringing to you? And also, how long can you flip it? Like, for example, if I were to make a difference, let's say I have a product that makes $10. Let's say I can buy a product for $10, and then I can sell it for, let's say, 20, so I make $10 profit. Then I have a different product I can buy for $10 and sell it for 30. I make $20 profit. So the question is, which one should I buy? I only have $10 in my pocket. So obviously you tell me buy the 30, right? Because you make $20 profit. but we want to know what the turnover rate is.
Yeah.
Because if the $30 product takes a full year to sell, then you only make once $20. If the $10 product sells every month, then you're making throughout the year $100, not just 20. So you have to know what your turnover rate is. And in this case, where this customer was, they had $12 million of cost of goods sold. An average was 1 million. So the question is, how quick can you turn over, right? So same way like in a grocery and every other business, how quick can you turn over this
Yeah.
inventory? So the answer was, it takes him, it's around a 3 month turnaround, meaning from when he buys till he gets it till he sells, it's like around the 3 to 4 months. So on average, if your inventory is $1 million, meaning if your cost of goods sold is 1 million a month and you have a 3 month turnover, then you should be carrying between around $3 million. Now, we know COVID made disasters,
Yeah.
right? Supply chain, everything got caught up. So nobody wants to go back down to those low levels. What happened to the car industry, right? Car industries have literally, when they assemble a car, they can receive parts like hours before the assembly. Meaning the car manufacturers, they like years ago, like 50 years ago, used to keep a lot of stock. Then they wanted they wanted to de-risk. They don't want to carry so much inventory. So they made a lot of deals with local manufacturers. They can have certain headlights to assemble a car and get delivered 5 hours before production line. COVID ripped everything up into pieces in terms of production. So you want to get some sort of safety stock, but the world is coming back to normal. Things are changing back. So if your average turnover is around 3 months, you're looking at a $3 million turnover rate, then you should maybe carry, I would say, three and a half, maybe four. But this customer was carrying 6.5 to 7. And I was telling them, look, you have $6.5 million of inventory. The extra $2.5 million of inventory, you're not making an extra dollar off it. If you would just be a little more efficient, a little better organized, you can pull $2.5 million out of the business and go buy some real estate, which is going to give you a 10 to 15% return on investment. So it's kind of having the proper
Yeah.
visibility, kind of understanding how your business functions. And the only way to do this is having a proper set of books.
Yeah.
Every company, and all the public companies, everybody has books. Nobody has books. There's no big company that runs without books. Who was
Yeah.
it? It was actually interesting that other company, the crypto platform of Gaucho, the one that went crashing, I think they didn't have books. I mean, they say they were using QuickBooks, but it was a public company. I mean, I think that was the first public company to ever hear using QuickBooks. Usually, once you're public, once you're that size, you have different softwares, more like enterprise, like NetSuite or something like that. But this was, it was interesting. But why bookkeeping is important? If you don't have bookkeeping, you don't have books, you have no clear visibility, you don't know what's going on. Whether your business is making money, losing money, you don't know. I mean, sometimes, meaning you can check your bank balances and see if the bank goes up or down. But in reality, like in this case, this was a healthy business that was making money, and they just had more inventory than they needed. And, with proper books, we were able to identify this and show it to them and tell them, hey, maybe try to be a little more efficient and work things out so you can invest this extra money.
Yes, I think that was a great point because a lot of businesses they're failing because they do not know how to get their inventory or what's the quantity they need to have, or if items is not making their money, to get rid of it. Like I see these issues with sellers all the time. So that's a good point, and it's great that they had you coming from the outside and looking at that. And is a business owner, you have to be able to look at these things and make decisions. And when you have reports, so that's like that's where you can actually make good decision. So that was such a good point, like make me think about a lot of mistakes that I did in the past. But my next question to you is, many sellers are really worried right now about looming recession. How can bookkeeping help in times like that?
So first of all, in bookkeeping, bookkeeping is giving you clear visibility. And having visibility on the business means understanding where the business makes the most money and where the business loses the most, and where the business faces the biggest risks. Um, in these days, and this is what I said in the beginning of the podcast, like, business a year ago is very different than now. And, the kind of there's a saying, when it rains all over. Like when there's so much business, like let's say, for example, you're selling a certain product, right? Let's say, for example, in COVID, you were selling webcams. Everybody sold out, right? You were able to sell whatever price you wanted, whatever it was. So point is that when it's a very busy season and everybody needs that product, it's not a big deal to sell a webcam. Whether your webcam functions properly, whether it's clear, whether it works, it's not a big deal. It has good reviews, does not. People are just so desperate to get it, they just go on Amazon or Walmart and just buy whatever they want. But once a recession kicks in, meaning to say where consumer spending is down, so people are now spending less money. People are being very careful. People are being very picky. Also, at this point, all the big companies already have proper stock. Like, for example, Logitech webcams during COVID were sold out. It was impossible to get it, and people reselling it for like 3 to 4 times the regular price. Now you can get it. So now you have to kind of see when it comes to selling, you have to kind of beat the competition. And this goes to every business. Why should I come to you versus going to the competitor, whether you're a service-based business or whether you're a product-based business? Whatever you do, why should I buy your product versus a competitor? So you have to sharpen that part out. You have to be clear what your vision is, what the product is all about, and make sure that the product is performing. So what's happening with the recession is that, and this is the way I see it, is that the people who their product actually solves a problem, people who actually have a good product and they currently have a good solution, those people are the ones who are really making money. And they're kind of standing out. Like, for example, if you have a certain webcam that you're selling, right? So maybe you're not selling the same what you saw during COVID, but if it's a good product, people are still going to keep on buying. If your product wasn't a good product, like, it was kind of like not a good one, and this was the only thing available at that point, then those people I see are losing out. So it's the sellers. I've been going. I'm going wrong. I'm riding along the sellers. Meaning to say, the way we also bill is we bill based on orders. So bigger accounts we charge more, smaller accounts we charge less. So I kind of get the same feeling. Meaning, if everybody's dropping, I drop as well. Now I can see on the bigger accounts, and I see on the sellers, the ones who have a good product are still doing well out there these days. And also, people are being today very efficient. People are being very on top of, they're being very on top of what they're selling. Meaning to say, people are like, because when consumer spending is down, people want to decide, should I buy the better product or not the better product? So what it boils down to is having, again, real clear, tight visibility on the business, understanding what is your profit margin, what is the best price I can give, should I move up, or should I move down? It's understanding all that aspect of the business and having it clear. And what I see is, if you have a good product, you could definitely pull through. It's no issue at all. As long as your product is a good product, as long as your product is solving a problem, as long as you have good reviews, you bring something to the table, those businesses continue to thrive. They might not be doing what they're doing, how much money, their sales might not be the same as they made last year. But what is very important is that they can trim their overhead as well. So if you know your proper profit margins, and like someone once asked me a question, he's like, is 10% a nice profit margin? So I said, it really depends. I can't say 10% is a nice profit margin. You know why? Because if you're a one-man band, you're running your own business out of your basement, and you're doing, let's say, 500,000 a month in sales, and you're netting 10%, and you have no overhead, then of course 50,000 a month is beautiful. But if you're running a team of 10 people, $50,000, you're probably negative. You can't employ that many people for that little money. So in terms of that case, what we say is that the best, in terms of having the clear, like in terms of knowing what the good profit margin is, meaning you want to know what your proper profit margin is, to understand what makes you a healthy business. So in that case, where somebody's a one-man band, 10% is a beautiful profit margin. If running a 10 team, 10 people in your team, then 10% is not a good profit margin. Either you figure out how to take your sales for the same size from 500 to a million, and you stay with the same team size, or you figure out how to increase your profits, your profit margin, that you're not 10%, you're at 20% profit. So then you have a bigger profit margin, you can play better around the overhead. So having that visibility through a recession is key, because if you know what your actual profit margin is, and you know, okay, I must do, let's say, $500,000 a month in order to break even and cover my overhead. If you know what you have to be, what your profit margins have to be, then that's key in terms of like kind of thriving. Because even if you have a profitable business, when consumer spending is down and sales are less, you know how to trim your overhead. You know how to kind of cut around corners. You know kind of where you could cut, where you can cut, to kind of like make this work and kind of try to pull through on what's going on.
Yeah, I think one of the things I did a couple of months ago in my personal life, in my business, is really understanding that it is some kind, there is, a recession, and we don't know how long it's going to last. And so I was just looking into, what can I improve, what can I cut, like which software, for example, I don't use, or if a customer is sourcing his product from a manufacturer, try to negotiate or try to find a different manufacturer with a better price. Look at your reports and see exactly where you can cut expenses. So this is like one of the things that um, I did personally, and I think it's a good time for everybody to do that. Probably just to see what you can, be more efficient, and what expenses, because sometimes we have so many expenses that we, softwares and things that we don't use.
Right, but that's in general that what people should do, and people should do that even without a recession. They should like at least have a 6 month period where they review all the expenses. But sometimes you're going to be forced to make certain decisions.
Yeah.
Sometimes you see, like for example, let's say a business owner, there's certain things they used to have employees do, but now if it's shrinking a
Yeah.
little bit, maybe they might need to do more things. Maybe they might need to work a little extra. So, or maybe, they can kind of cut. So in the past, that it might have been, let's say, for example, certain stuff are being done in-house versus outsourcing. In the past,
Mhm.
sometimes it's better to do it in-house and sometimes easier, but sometimes if you outsource, it might be way cheaper. So
Yeah.
in the past, the business was making so much money, they didn't really care that, it's easier for them, better to focus the business. So let's just do
Yeah.
it in-house. Now with the recession, they're saying, okay, my over my overhead is not allowed to be more than X. I really need to see how to figure out this puzzle. And in that case, they kind of, they can make certain drastic decisions which can, help and pull them through a recession.
Yeah, exactly. So yeah, this is why it's really important to know your numbers, and have like a clear picture. So that's taking me to the next picture. The next question is how e-commerce bookkeeping is different than other businesses bookkeeping.
So it's very simple. If you walk into the Walmart store, yeah, there's one right next to my house. I go in there time to time. So let's say I go in there, I want to buy a bottle of milk. Okay, I go to the counter, I take a bottle of milk, and I walk to the register. So there's actually somebody who is scanning that product, taking the money from me, and it's getting recorded in their system that it was a sale. There's actually somebody who's doing the sale, right? So, and then that, I don't think Walmart uses QuickBooks, but whatever they use, that system that records the sales, probably at night sends over all the data to their accounting system and to reconcile with the bank and all that. So when you go to the store, you understand that these are register, these are process, there's somebody who handles the sale, and that's the way the sales get recorded. When you're selling online, that physical appearance is gone, right? If I go to your Walmart store and buy something from now, you don't even know about it. You might be sitting at the beach. You have no clue. So you're sitting somewhere else. Meanwhile, I'm on my phone buying stuff from your store. Now, when are you doing the accounting for those sales? Like, it's not like you, it's not like there's a person who's accounting for it. Walmart has this thing. Once the order comes in, it's marked as paid and it just automatically ships. So now, how do you get all that information from all those sales, all those orders into QuickBooks, right? You have to account for your sales properly. You have to account for the inventory sold properly because you want to have proper books. You want to have proper visibility. So how do you kind of get all those activities that's happening online? How do you kind of get that into your books? So that's kind of where we come into play. We're the middleman between the e-commerce platforms and your QuickBooks, where we connect to it, get that activity for you, and record it. Versus in a regular store, you can even use QuickBooks POS. I don't know if it's really popular these days, But like QuickBooks themselves has like a POS, or you can use Shopify POS, something like that. But you can have like a POS system where somebody actually takes the orders, you know what's going on, you see what's happening, and then you record it in your store. And also, usually retail stores, like small businesses, tend to do much less. Like if you're doing, let's say you're doing online, like around 10,000 orders a month, right? That's like kind of, I would say where you start breaking out as a seller. So if you take 10,000 orders divided by 30, you're looking around 330 orders a day. Most retail stores don't have 300 people like in foot traffic. I'm talking like a local shoe store, maybe like a supermarket more what have it, but like a local shoe store, they don't sell 300 pairs a day. There would be a mob house that would need to be like Home Depot or any of those bigger stores. So with the small businesses operating online, that caused them to do tremendous volume, and there's just no way how to get that all in. So if it's 20 orders a day or it's 50 orders a day, even selling, if you're a retail store, you're selling 30 pairs of shoes a day, you're doing well. It's not, you don't have to like get that many. And also markups are very different between online and retail. And you don't have all those Amazon fees or Walmart fees and all that going on. So it's very different when you're running a retail brick and mortar versus running an e-commerce store. And that's where we come into play, where we connect the activity that's happening online to your QuickBooks platform.
Yeah. Let's take a quick note from our sponsors.
Wallysmarter.com is a cutting edge software tool designed to help online sellers make more money on Walmart.com. Featuring advanced keyword and product research tools, Wallysmarter identifies high demand, low competition niches for you to capitalize on. With more accurate Walmart sales estimates provided by its easy to use Chrome extension, Wallysmarter takes all the guesswork out of selling on Walmart. Be empowered to make more informed decisions and grow your business like never before. Try Wallysmarter today with no credit card required. Did I say no credit card required? Anyways, use your coupon code POWER30 and get 30% off Wallysmarter today for life.
All right. So, Nachman, what the mistakes you see sellers doing mostly with their accounting?
Sure. So one of the biggest mistakes I see a lot of people doing is, let's say you're buying 1,000 units of a product, you bring it into your warehouse, and now you're starting to prep it to send it to WFS or FBA, whatever it is. And what they do is they want to account for their inventory. So they come in with this calculation. I'm sending out now 500 pieces to Walmart, so this is no more in my warehouse. So then let me just create an invoice and take it off my books because it's by WFS, and when it sells, it sells. A lot of people do that because at a glance, it makes sense. It's like easier. And what ends up happening is it screws up your books. Why? First of all, you never know how much money you're going to make online. As much as you can forecast and you can participate, but you don't know at the end of the day what it's going to sell. Now, I had a customer, which I was looking over the books, and it showed 1 month they made $50,000. And I knew it didn't make sense because I knew there's no money in the bank and we couldn't even pay any bills. So I was like, how does this make sense? So I started digging through it, and I saw that they prepared a huge shipment to go out to the fulfillment center, and they created a big invoice in their books. So what ends up happening is, since they created this huge invoice, it was like $100,000, and they also estimated their profit. So they estimated, let's say they do a 40% markup, they estimated after their fees, this is what they should make. It happens to be they don't make anything close to what they estimate, but that's what they were estimating. So first of all, we're recording sales. We're showing that we did 150,000 sales when not one piece even sold. Secondly, we're recording 40,000 profit, which never happened. Third of all, the inventory is still yours. The inventory is yours until you sells it. You can't take it off. That's one big mistake that we do. And the reason why sellers do it is because it's much easier to, I'm sending out 20 pallets, let me just put it in. Now, when it actually sells on Walmart, it's way more complicated because you have to download the reports, see what's sold, for how much it's sold. You can have a repricer moving up your prices every single day. So you have to kind of calculate the proper sales amount. You have to calculate for all the fees, the ad spend, all that. And then you also have to match it to that bank deposit, which becomes a nightmare to do, which is something that we completely automate. So that's one big mistake I've seen sellers doing. And another big mistake is I have seen a lot of sellers doing is they don't account for all the fees properly. So people sometimes try to do this manually or try to use some other softwares which are not adequate. And what I mean to say is there's softwares I feel like they are there to, they're just like, let's say for example, like a PPC software. So there's softwares out there that are amazing when it comes to PPC. They handle your campaigns, but they what they do is they have a profitability report. So they will show you how much money you're making profit. What's the problem with that report? Is that report will only be based on orders, because the PPC software wants to show you, okay, you ran this campaign yesterday, you were very successful, so you spent, let's say, $20,000 on this campaign this month, and this is how much sales it brought you in. Now that's very good, but then there's one other problem. How many returns are you getting? What is your return rate on the product? How many returns are sellable or not sellable? That makes a big difference. If you're in the electronic industry and you get a return, most likely that's going in the garbage. You can't really resell. And if you resell it, you'll probably, I see bigger accounts when they resell electronics, they maybe end off with like 50% of the cost. So if the product costed them 100 and they sold it for 150 or 170, when it comes back returned and the box is ripped up, but they can try to like somehow resell it, they usually end up getting back like $50. But that's a separate story on the side. But first thing is, how many returns are sellable? How many unsellable? What is happening with stuff that get lost in the Amazon warehouse? What happens with reimbursements? How do you account for that? So not having the every single fee aligned to the product and everything, just looking, wow, I did so many orders without accounting for all the different fees, could be a game changer. I actually had a customer once who I showed him that on the store he was only netting 7%. Actually, it was around between 4 and 7% gross profit before overhead. And he was basically all the time telling me before we started, okay, you're going to tell me which expenses I can cut. I said, okay, let me finish it. So we went up. His overhead was $100,000, and we said, okay, look, from the $100,000, a big portion was rent, a big portion was payroll. So payroll, he couldn't cut anybody. He said he needs all the people. Rent was an option either. And then there's like maybe $10,000 in things. I said, from this $10,000 in overhead, there's not really much you can do here. Maybe you'll cut 10%, you'll save yourself 1,000, but that's not making you rich. The biggest problem is that you're doing close to $1 million a month in sales and you're only netting 4%. The question is, what's going wrong there? So he's like, can be. So we took a product out of the hat. We picked out one product, and he showed me, according to this software, I should be making, according to this software, his PPC software, he should have been making around $7 to $8 a product. So he should have made on that product, let's say $100. I showed him that he lost 100. Now, why? That software never accounted for storage fees. Like that software didn't account for the returns. That
Yes.
software didn't account for outbound shipping, or that software was not calculating landing cost. So all the other fees that wasn't calculating properly, that wasn't doing it. So he's basically walking in the blind and kind of like thinking he's making money with these products when in reality he wasn't. So this is where the two stuff where I would say highlighting the worst things. Number one, people try to take things off the books before they actually sell it, and the second thing is not having a proper reporting tool which accounts for every single Amazon fee or Walmart fee. Like one of the things that we do is, since we're a bookkeeping software, we need to send this data to QuickBooks. So for example, if you're getting a bank, a disbursement of $10,000, we need to create an invoice for all the sales, then account for all the fees. And we need to end up matching the bank account, because you want to do that bank rec that we spoke about. Doing a bank reconciliation means you account for every dollar in, every dollar out. So if you want to account for every dollar in, you need to have that deposit that comes in for Walmart needs to match your bank account. And you want to get that to match. The only way to get that to match, is having proper, bringing everything in and accounting for it. So when we get your sales, one of the things is we match it up to the bank. And that means that our reporting will be 100% accurate. That means our reports will account for every single fee out there. So if you're looking for something to get like really accurate account for every single fee, that's where we kind of go into it.
Yeah, I think a lot of people having a lot of mistakes because there is so many fees, and without the proper software, you're gonna miss so many fees, and there's so many expenses even out of the like even outside of the fees that Walmart is taking or Amazon is taking. So so for sellers that selling on a couple of platforms, how ConnectBook is really coming to help, making it easier and, for them to actually have like better, bookkeeping with their online stores.
So, I mean, the more platforms you have, the more complicated the bookkeeping
Yes.
gets.
Yes.
It's also more complicated is because if you sell the same product on Amazon and at Walmart, in your QuickBooks it's going to be one SKU. Let's say you're selling cans of Coke, right? I buy 1,000 cans.
Hmm.
I list on Walmart. I have 100 available. I list on Amazon a few hundred available. I do FBA. I do WFS. I list on eBay. I do my own Shopify, right? So all
Yeah.
those sales coming in actually end up pointing to one product. So you
Hmm.
have to have a proper system how all that gets recorded in a way where it flows into the right products and deducts the proper inventory. Now, one of the things is if you don't deduct the proper inventory, then your cost of goods sold is not going to be accurate and stuff won't end up matching up. So what's important is that you get everything aligned the proper way. If you're a small business and you're selling 3 different products just on Walmart or just on eBay, might not be a big deal. But the minute you start expanding, you're going to find yourself in a big mess and it's going to be hard. And what we see is these days, especially with the recession, we actually have a lot more people reaching out to us, way more concerned. Meaning, we're signing up customers to our business for 4 years. People who a year ago were not too concerned about the business. At this point, they are.
Yeah.
So people are getting very concerned, and they want to make sure that they're going to survive the recession and all that. You want to make sure that everything is done properly and you have clear visibility and at that point where you know how to keep it and you know how to keep track and know what's going on.
Yeah. So I see people get stressed when they're adding a new platform. Like then it's like, oh, now we added Walmart. How we do our bookkeeping now? Like I see that, question from a lot of sellers.
So the way ConnectBooks works is that when somebody signs up for our platform, what we do is there's 2 parts. These like I would call it more like of a discovery call, where we get in the phone, we have a call with you to make sure we're the proper fit and to make sure whatever we do is the right thing. What we are looking for, we're looking for long-term customers. We're not looking for people to come for 1 month or 2 months or 3 months and then cancel. So the idea is how do you get a long-term customer? First thing is make
Mhm.
sure you're a proper fit. Make sure what you offer is something valuable for them. Make sure we solve the problem that they need. Usually, like if we don't solve the problem, I'd right away tell them, this is not something we think with a proper fit. Maybe try a different solution. And we would also try to highlight, say, okay, this we could do. This maybe you'll need something else. Maybe you'll need Connect Books plus like a good inventory management solutions, which we integrate with different inventory management solutions as well. So we could kind of, give you the full picture. So we do that as well. And then after the discovery call, the client has a decision to make. Do they want to sign up or not? If they do end up signing up for the platform, then we have an onboarding call. So on the onboarding call is we would have somebody who's a specialist in bookkeeping ready for 12 years, walk them through the platform, explain them how every single thing works. So there's no guessing games. We want to make sure every customer is happy. And as I said before, we focus on long-term clients. So only way to have a long-term client is making sure they get what they need. I mean, people might pay me for 1 month and then cancel, but nobody's going to pay me for 3 years if they don't use my platform. So, our deal, we have a very high retention rate. And that's because, once you get this thing set up and working, there's no reason to switch. Meaning your books are your books. We're doing it and we're getting it done. And we constantly enhance our platform. We constantly roll out new features. So, we will walk you through the process. We will make sure you understand. We also give very good customer support. If you have any issues, anything like that, we walk you through the problem. So, you shouldn't feel stressed out about adding on a new platform because we'll make it as easy as possible.
Yeah. So, um, what features like you have that you recently update, and also what features do you have that nobody else have?
Sure. So a few things to add on what I said before is that we try to make it easy as possible. Is one of the things we really did is we redid our design in the last half a year. Meaning we were working it for over a year, but what we did is we tried to make if anybody looks at our platform, they'll say, "Oh wow, it's like really nice and clean." And what does that mean for a seller? Why did we do it? That that costed us a ton of money in terms of design, development, implementation. Why? Because we wanted to make it easier for the user. We want to make it as easy as possible. We don't we we take it very seriously. We don't want to complicate the software. We don't want
Yeah.
to make things complicated. It's very easy to make it complicated. And I always say, you know what the success of the iPhone is? The success of the iPhone is me as a young, I'm a young guy, 30. And I'm very tech savvy and I love technology. I love the iPhone. I use it all day. And my father, who's 65, barely knows how to use any technology, and he somehow manages to use the iPhone. So the power of simplicity that the older, people or people who are not so tech savvy can do it.
Yeah.
So the younger people, that's what gave it off. There were other smartphones before the iPhone. Like there was remember, it used to be the Palm Trio. There's like a Windows phone, which was, I remember as a kid, it was so advanced. It had way more features than the iPhone even had at that point, but it never took off because it was so complicated. So
Yeah.
we focus a lot on simplicity, making it an easy, clean, user-friendly platform. That's for the customer side. And then we also recently rolled out a lot of new features. So one of the main new features which customers go very crazy over is something called comparison reports. So what does the comparison report do? So what happens is when you're selling, the question is, the more expensive the product is, the more sales you have. So let's say, for example, you're selling a product for $35. If you move down the price to 30, you'll have more sales. But the other question is, will you make more money or not? That's kind of like, okay, I understand that I'll sell a little bit more, but is it worth the headache? Will I make more money? So with our comparison reports, you can literally you basically get column by column. You can compare, let's say, this month versus last month. You can do this day versus today versus yesterday. You can do the whole month and have a breakout by day, or you could do the whole quarter by week, or whatever you want. Or you can take this year versus last year, and you could see the performance of the product. You can see how well it's performing. So when you kind of make that change and you drop the price or up the price, or you kind of move around with your ads campaigns and you want to be on top, is the product actually making more money or less money? That's where we give you that visibility, which sellers have been going crazy over, and they literally just sit on this all day and look it over.
Yeah. Yeah, that's so interesting. So, for our Walmart sellers that listening, is the software is really can be helpful for um, taking all the transaction, and they can see, because a lot of time, the dashboard of Walmart is not as sophisticated um, as Amazon yet. There is a report. It's still not the same. It's getting there, and a lot of times sellers having a hard time, to see more clear picture. So is ConnectBook can help them see a better, clear picture on their Walmart business.
Yeah, sure. It definitely will give you more insights, better visibility. It will show you your sales, profitability, all that. There is certain limitations on Walmart versus Amazon. For example, let's say ad spend we don't have per product. We have other fees per product. Um, if there's a way that you can figure out your ad spend per product, we will have a feature where you can upload it. Like you can upload a sheet and saying this is my ad spend per product, but we don't have the ability to do it, and that's just because Walmart doesn't have that API. We've spoken to them many times; they don't have it. But on Amazon, we do have it. And Amazon, you know, Walmart is behind on the APIs from Amazon, but whatever they have, we have. So if you want to see like your sales for the last month, you want to see the comparison, how it moves up, you want to see the fees, and you want to get to see all that per product and get that all done the right way, that's something we can do.
Is also the software helping with like inventory prediction?
Yes, we do have something, but not yet for Walmart. We it's actually going, no, it's probably going live the next month. So what we have is we built it for Amazon. We have the same thing for Walmart. It's basically it will be more for WFS. It wouldn't be like a whole inventory software. It would be more like how to replenish your WFS with the proper inventory amounts. So what the software does, it would take your sales, let's say for example a certain product. We would check what your sales were the last 30 days. And based on that, we would tell you, okay, for this product, you have to replenish X. For this product, you have to replenish X. We'd give you the predictive requirements needed based on the products
Yeah.
themselves.
Yeah, that's a great feature. So so guys, if you want to try ConnectBook, we have this really nice offer from you guys. So we have 20% off for the first 3 months. Use a coupon code Power 20.
Yep.
Um, anything else before we're gonna take some question? Kelsey, if we have some question, we can start with them. But anything else you want to add?
No, it's been, if anybody needs more information and, wants to know more about more about a product, just visit our site, open up a live chat on our website, and, we'll be there to help you.
So is that the best way to connect you through the
The
website?
best way to connect, yeah, you can either send us an email at info@connectbooks.com or just visit the
Okay.
website and we have live chat, open up a chat and just, tell us you want more information and we'll be there.
All right. Amazing. All right, Kelsey, do we have any questions?
We have questions. They're Walmart related, not bookkeeping. So I don't know if you want to save that for the Q&A next week.
Oh,
or
yeah. If it's not bookkeeping, we're gonna keep them for Thursday, next Thursday.
All right. Perfect.
All right, amazing. Well, thank you so much for your time, and hope it was helping our audience to get some answers, and hopefully we will get you here soon again.
All right.
So thank you everyone, and we'll see you in our next episode.